Hi traders, and welcome to the Technical Analysis Friday wrap on the 12th of August. So we're going to have a look at all of the majors this week. We've seen some pretty good moves actually. We've seen some breakouts of some key zones. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD. You can see we had that breakout. We finally broke out of that zone that has been building up really. We've had this bit of a channel building up for quite some time now. And you can see that we finally got that breakthrough and it's hovering around the 71 cent mark now. So yeah, look, now that it's actually formed the lightning bolt that we've been waiting for, even though it's a very prolonged one and a breakout out of a very tight range, what we could be looking for here is probably a move to the 72.50. Although it seems a little bit far away at the moment, it can get there fairly quickly, especially if it breaks this 200. Now, the 200 is in the way, there's no question about that, and we do need to get past it before we start to get funky on the moves up to the 72. It's pretty much 60, but if we go for the 72.50 marker, I think you'll be pretty happy with that sort of trade. But if we get a daily close above that 200 moving average, it's really actually quite important that we get that before we start aiming for the 72.50. It should gravitate to that key level. You can see here that we've had resistance at that point exactly. So in realistic terms, the 200 has also been a bit of a stumbling block for it, as you can see. So ideally, in a perfect world, we'll see a break of the 200 moving average, and then we will look at trading it to the 72.50 marker. So not a bad trade, and certainly finally good to see it break through and actually test these levels. What we've also got now is a 20 and a 50 moving average cross, as you can see here, right in the middle of the channel. It hasn't happened in quite some time, as you can see. So yeah, look, it's looking like, you know, basically a move above the 200, and we're all good. Failing that, I wouldn't be looking at a short on this one until it actually broke down into the channel again. Now that it has broken through, would be fully expecting that it's probably going to continue. But if for some reason it did turn around and start to test these levels from above, if it does reverse at this level here, it's a pretty easy target straight up. So if it does get back down to that 70 cent mark, it's probably going to see this top of the channel as a bit of a roll reversal zone. And then you'll be able to, you know, trade off it again and test these highs, which is not a bad trade in itself, really. It's not too bad to actually trade into something that's already been formed most recently, because all of the hard work has already been done for us. But a daily close back inside this channel, and I'd be starting to target the bottom of the channel again. So realistically, that's not the preferred trade, but that's the one I would take if it actually got down there again and broke below. So break above the 200, and we look for longs up to the 72.50, retest of the 70 cent mark, and a small lightning bolt on the way up to retest the 71.30 area, which is where we're at in this recent high, and a daily close below the 70, and we start to target the 68.80 area. So 3 reasonable trades on the Aussie. All of them are pretty good, but the long is probably the more preferred in this case. All right, we'll go over to the US dollar CAD. You can see we finally got that breakdown from the center zone of this bigger channel. Like, I mean, that was channeling on the inside between the 28.50 and the 30.50, but look, we've seen a significant break now, and it has tested these lows. Look, it touched a 200 moving average, which is always, you know, a bit of a stumbling block for it, but it finds itself right in the middle of the next channel. Like, realistically, a daily close below the 200 here, and we can start targeting the 126.50. Pretty reasonable area to go for, and I think that it can get there fairly easily too, especially if we get a daily close below the 200, and that still gives us about, you know, 50 to 80 pips of reasonable trading. So it's still a reasonable scalp in that instance, but it has to do exactly what we need it to do there. We can't just have it you know, hover in this area, because it's likely to actually reverse back up and test the middle zone of about 28.50 here from this point. So you need to go to the smaller time frames and really isolate a trade. And really the time frames that you'd be looking for on this one would be on the 1 hour, because it's hovering in a zone where you're gonna have to be probably fairly fast to react to actually get the moves. As you can see, at the moment, it's right in the middle of that channel. Like I said, you can't see the bottom of the blue, but that channel there, we're trading right in the middle. A significant move either side. So if we see a series of lower highs and lower lows, we've already got it there. Another low on the 1 hour chart. So if we get a low lower than the 127, say 25 area, that would confirm the lightning bolt on the way down, and I would start to target the 126.60 area. So that would be the scalp in that direction, and of course a lightning bolt on the way up, and then we'd start to target the 128.50 area, and then look to get back into the top channel. So Look, reasonable trading, but you've got to be sort of, it's one of those ones where it's very situational. If you're not actually in the in front of the charts when it actually does happen, it's going to be difficult to actually get hold of. So it is one of those ones that's trading inside a range, and it's not a bad range either. So, you know, you're going to get reasonable pips on the scalp, but it's one you've got to watch and trade instinctively as you see the action happen. It's hard to predict exactly where it's going to go. So in reality, it's fairly easy trading, really. I mean, at the end of the day, the markers are there and very easy to see. Basically, a close above 128.90 on a 1 hour, and yeah, we start to target the 128.50, and a close on the 1 hour below 127.30 or 127.25, and we start to target the 126.80. So about 50 to 80 pips either side. And yeah, fairly easy pips, I think. I don't think it's going to break out of this range anytime soon. But if it does, yeah, we look at it from different lenses, of course. But at the moment, we're looking at maintaining the movement inside this channel until it actually breaks either above 128.50 or below 126.50. Then we set up the next zone. But for now, pretty good trading inside this zone on both sides. And I'm not biased either way. I'd be happy for it to go either side. And I'd trade that with a reasonable amount of confidence because the levels are pretty good. All right, let's move over to the US dollar yen. This one's been a fantastic trade. It's been technically very, very perfect, as you can see. Touched the role reversal zone, as you know. We talked about that last week. It's done all the right things and bounced off this level and got back up to the 50 moving average and the 20 moving average right here, as you can see, and then sold off the 20 moving average back down to this level. So it's really bouncing up and down between our levels quite nicely, and giving us reasonable pips in the process too. You know, like we've got reasonable amounts of movement on both sides there, and the levels are holding up very, very nicely. So hopefully you've been able to get hold of that. I think it's been a very easy trade. Look, the way you want to trade it obviously is on the smaller time frames. The 1 hour gives us all of the levels, but yeah, the daily, sorry, gives us the levels. The 4 hour and the 1 hour are where the trading is at. As you can see, the 4 hour was giving us a series of lightning bolts, and then it found the test. And this is why it's so important to do the testing on of the levels on the bigger time frame, because on a daily, for all intents and purposes, yeah, this is stopped in the middle of nowhere, and you think, well, why didn't it keep going? But you know, when you go to a daily, you see you're right on a 50 moving average and bearing down on a 20 moving average. So unless those levels are there that you can see in front of you, if you don't go through the different time frames, you're not going to know that that's a significant level. So that's why it's very, very important to do all of your markers. But that's the 4 hour. Yeah, and on the 1 hour, you've also got a series of yeah, reasonable amounts of movement. You can see the 20 moving average was tested to give us a sell-off. But once again, if you're not looking for the bigger time frames and actually putting the markers on it, you would appear to be stopping in the middle of nowhere when it's actually not. Okay, you know that it's not stopping in the middle of nowhere because, quite frankly, the 200 moving average, the 20 moving average and the 50 moving average are right there on the daily. So, you know, whether this is a little mini double bottom on the 1 hour, I guess time will tell. It's going to be an interesting one. You've got to really go to the daily to understand the levels of where it could get to. And I think that from my understanding of what this has been doing most recently, it's probably going to hover inside this zone. I wouldn't be trading it shorter than this until it actually breaks this roll reversal. If we get a close below the 130, that's a different story altogether, because then we've got a confirmed lightning bolt on the way down, and a big push down probably to the 126.80 would be the target there. So pretty good trading on it, but you've got to wait for it to actually do it. Until it does get a daily close below or above one of the key levels, we just scalp it inside the zone, and I think it's been a really good scalp. So just keep an eye on it. We expect to find support around the 131.50 and probably resistance again at the same levels around that 135.20. If it breaks that, again, we're going to find trouble at 136.80. So very good zones. Just keep an eye on the levels and make sure that you've got the big daily levels clearly marked. So when you are scalping on a smaller time frame, you know exactly where to aim for, and you know where the resistance and the support is going to be. Okay, we'll move over to the dollar index. So the dollar index it's trying so hard to break down this level. You can see here, it was trapped between the 20 moving average and the 50 there for quite some time. As you know, it did get a close below the 50 moving average, but it found itself right at the roll reversal zone. We know this is a really, really important area, obviously, because it was previous resistance. It may end up being support, but it's looking likely that, you know, now that it's failed to actually make a new high, like you can see, we've got a series of lower highs and lower lows now, and it looks like it's only a matter of time before it actually closes below here. Now, we're not going to preempt it, of course, because we do know that it's a pretty strong level. So we're certainly not going to preempt that it's going to break down. But if we do get a daily close below this level here, below the 104.50, we're obviously going to be logging the euro. So we're going to have a look at that in a second. But in realistic terms, at the moment, for now, it's holding. But yes, it's a role reversal, but we have got a series of lower highs and lower lows that makes this level very, very precarious. So we'll see what happens there. Of course, a change of trend on the smaller time frame and starts to trade up, then we look for the targets back up to 106.50. So we'll go to the euro because obviously that's the one we're going to trade. And as you can see, look, it wants to, you can see that it actually really wants to go long. It looks long. It looks like it's forming a pattern where it's trying to break above the resistance that has been holding it up between the 20 and the 50 moving average, or the 20 moving average. It's trying to get above the 50 moving average. If it does, look, we targeted the 104. It all but got there. I mean, it got very close. It got to 103. 70, I think it was. So it got very close, and I'm not sure it's done yet. Realistically, you can see, zoom it in a little bit. It really attempted to get there. And for mine, it's all going to be obviously depending on what happens on the dollar index, but it looks long. The MACD power is about to go to the above the 0, so we know the 12 and the 26 are all but crossed. It's very precarious for the shorters. I wouldn't want to be shorting this right now. It doesn't look short, but again, you're not going to just jump in on a longing. You really should have already been in. We were talking about it through here, so hopefully you were able to get that. But now it has to actually get onto the business and get above 104. If it gets above 104, we can start targeting the 106 level. It's got reasonable moves once it does eventually break through this level. So there's plenty of movement on the way up. There's no need to panic that you're going to miss the move. But for now, it's probably just smaller trading. We're sitting at a reasonable level right now. But for me, probably the highs that have just been tested would be the first aim. And these two rejections can't be ignored either. Like, it has had 2 goes at breaking that level and hasn't done so. And that's obviously the support that the dollar index is finding at that role reversal zone as well. So very precarious level, very interesting level. I'd be setting my alerts and break, if you want to scalp it, I'd be scalping it to the 104. Any smaller time frame change of trend on the way up, either a 1 hour or a 15-minute, you can look for scalps up to the 104 level. 103.80. It's about 40 or 50 pips after the lightning bolt confirms. But of course, a daily close below the 102.80 would make it look very likely to get back down to the 101.50. So that's the bottom of this channel here. Okay, so pretty easy trading, still in the zone, but we're waiting for that big break, and that it looks like it really wants to try, but of course we're not going to trade it until it does. But we can certainly scalp the moves into those key break areas until that actually happens. But pretty good trading on the euro. But if I was a little bit biased, I'd probably be saying it looks more long than it looks short, mainly because of the MACD power that we're getting here. The indicator power is giving us signals that it's going along. 20 moving up, MACD moving up. Price action is also moving up. So all of the key indicators are saying that we're going to see a break up, and we'll wait for a daily close above there. But if you want to scalp in that direction, and of course a break below here, and we can start targeting the lows here around the 101 again. So yeah, not bad trading on the euro. All right, over to the S&P 500, doing all the right things again, not letting us down. Lightning bolts all the way up. It broke the key level this week. We know that was a role reversal zone. It broke it well and truly. Had a little bit of a pullback today. The CPI data was reasonable. It wasn't fantastic, but it wasn't terrible either. So it was obviously in line. The market liked it, and it gave us a pretty good day. But we've seen a little bit of a sell-off. It's obviously tested these zones up here, and didn't like what it saw. Back to a pretty interesting area around the 42. 41.50 is the key. It needs to stay above 41.50. It's going to go long, right? Simple as that. If it's trading above the 41.50 next week, we can look for longing opportunities back up to the 42.90 area to 4300. That's the area we would be targeting. But a daily close below the 41.50 is going to show a fair bit of weakness weakness in an area where you really don't want weakness, which is at a reversal point. So if it stays and maintains above this reversal point for the rest of the week, we'd be comfortable in looking for longs up to the 4,300 next week. But of course, a daily close below the 41.50, and it would be looking quite short. So, and you can trade both either side, really. I mean, I haven't really got a bias on this one. I think it's done the job. We've already seen a really good long move. It's given us plenty of trades over the last few weeks to get up to this level in the first place. So I'm not going to be concerned which way it goes. I'll be happy to for it to go down and up. It wouldn't make any difference to me because I think there's trades that are very viable on both sides. But I think the key breaks are the 41.50 is the key zone here. Stay above it, and we're looking to go to the 4,300. Daily close below it, and we're looking at getting back down probably to the 4,050, which is a likely first target for it. So yeah, this is around that level here. Okay, so I hope everyone's had a great week's trading. We've seen some really good moves. Hopefully you've been able to catch some of those pips. Have a great weekend, and I look forward to seeing you all next week.